To our focus of the day. The oil and gas sector is one of the most important sectors in the country's economy, accounting for more than 90% of the country's exports and 80% of federal government's revenue. Oil and gas companies are building cushions to deal with the impact of COVID-19 or price war, amongst others. Oil prices still trade relatively low compared with the pre-COVID-19 levels, at about an average of $40 to $45 per barrel. With the recent compliance of oil production quotas by Organization of Petroleum Exporting Countries, OPEC, and members, efforts are on course to stabilize falling prices. Consequently, the short to medium-term outlook for high-cost producers, smaller operators, and those companies with high levels of debt appears to be more challenging now than ever. International oil companies, indigenous oil and gas chemical companies are responding by quoting capital and operational expenditure, which will filter down to suppliers and oil servicing companies. So far, Minister of State for Petroleum Resources, Timmy Presivia, says government will continue to intensify price quoting measures, but for many economic watchers, other issues such as heavy dependence on petroleum products imports, prices, forex matters, and state of refineries must be simultaneously attended to. In the light of the foregoing, I have joining me now via Skype from Victoria Island, Lagos, Mr. Joseph Nwakwe, who will be assessing the effects, regulations, refining, and pricing issues of COVID-19 in the oil and gas sector. He is the chairman of Society of Petroleum Engineers Nigerian Council. Thank you very much for your time, Mr. Nwakwe.
Thank you and good afternoon.
Yes, afternoon to you. Let's start with an overview of the sector. A lot has happened before now. COVID-19 has come with its negative effects on this very important sector, talking about Nigerian economy. We've also seen figures from the GDP today. What's your assessment of Nigeria's oil and gas sector as we move on in 2020?
Well, that's a very good one. The oil and gas sector is very key to our overall economic health as a nation. So it's critical to our livelihood as a nation today. Sadly so, though. The COVID-19 has thrown a wrench, if you will. Our economy was essentially struggling before COVID-19. So COVID-19 has just worsened what I may call a very bad economic outlook. It's challenging. It's a global problem, but it's worse for us because we were already in a very difficult place before the outbreak. And the difficulty really stems from the fact that we are dependent on a commodity whose demand is rather depressed for now. And the other issue really is that we haven't built up any reserves over time. Our reserve levels are rather low for a country this size. So that's a very challenging situation we're in. So it's our hope and prayer that oil prices will recover. That will help, but the forecast is not very rosy. It doesn't look like it's going to recover in a hurry. So we will continue to hope that the economic managers will do what needs to be done to keep the boat afloat.
Keeping that boat afloat. Now, Mr. Chairman, I'd like to ask you how you advise government to balance the need to optimize government needs for revenue, especially at this critical time when government needs money, and ensuring that the fiscal terms are sufficient to attract investment from the oil and gas companies.
Yeah. Okay, I think so you have to look at this from, you have to break it up into time horizons. In the near term, what you really want to do is to sustain some level of economic activity. So it's important that government does what it needs to do. But then the medium to long term is a bit more challenging, and that's where the issues around PIB and all that will come in. If you think about Nigeria with 40 billion barrels of reserve, and I will say, if we worked the numbers could be much higher than that. If we did the work that needs to be done, exploration-wise, we could end up with a lot higher reserve number. So that's huge. If you look at 200 TCF of gas, that's huge. So this requires significant investment. Where we are today, we do not, as a nation, have the resources to develop these assets. That's the fact. So whatever legislation, fiscal regime that you come up with must necessarily be one that attracts the capital to develop these assets. We do not want, and we hope that will not be the case, that we'll leave oil behind like we left coal. I said it's not the right thing to do. So to maximize the use of these assets requires significant levels of investment. And we pray and hope that the fiscal regime that will be in place will be such that will attract the much needed capital for that development to happen. That would be good for the economy, that would be good for the industry.
Sounds very good. Now, staying with fiscals, a key determinant of foreign direct investment for exploration and production activities is the competitiveness and, of course, attractiveness of the petroleum fiscal system underlying the oil and gas development in the country. Now, you've talked about that, but now how does the fiscal terms in Nigeria, when we compare with other jurisdictions like Angola, Ghana, Mozambique, and maybe Brazil, how does that come to you?
Well, there are two. I mean, we can do all the analysis we want, but the hard fact is that right now we've lost some measure of competitiveness. If you look at the investment in the last 15 years, it's very clear that capital is not flowing in as it should. So that tells you that the investment community is looking at us with. And of course, when we started talking about PIB, that increased the level of uncertainty around investing here. So we are not today competitive enough. We need to do what we need to do, and to reduce the uncertainty, one, and to come up with a fiscal regime that will be attractive to the investment community. This will help. This will help attract, bring in the capital that we need to develop these assets. So in terms of today, where we rank, my answer is we do not rank very well in terms of our ability to attract capital to our industry here in Nigeria.
Indeed. And you touched also on the PIGB, Petroleum Industry Governance Bill, that was passed by the last assembly. Now, I think that document, one way or the other, recommends a single industry regulator. Well, I want to know your take on the single or the dual regulatory regime. Which do you think is the way to go?
Well, I will answer this way. SPE has no view on whether we have a single or a dual regulator. SPE has no view on that.
Okay.
SPE desires a regulatory framework that enables business. That's what SPE will. So whether it's one or two or three, it's immaterial to SPE as an entity. However, I do have a personal view. I think that consolidating regulation is important. I think we need to reduce the cost of regulation as a nation. I'm talking as a Nigerian now. So that my personal preference would be that we consolidate regulation. That way we can build capacity. The industry is high tech, so you need to build significant levels of capacity to be able to regulate it. So I think we'll do better if we consolidated regulation. That's one. It will help us to also reduce the cost of regulation. We tend to forget that the cost of producing the barrel is not just the unit technical cost. It includes cost of regulation. So when you have too many regulators, you tend to lose control of the cost. And that's not, from the country perspective, that's not what you want to do. So, but that's my personal view. Like I said, SPE's view is we do want a properly regulated industry. We hold no view whether you have one or two. It's immaterial to us.
Indeed, we see that as a personal opinion. Now, Mr. Chairman, let's now look at issues surrounding PMS, downstream now, pricing, crude oil price. We've seen what's been playing out every month. We now have the triple PRA and also the marketing company coming up with prices. This has generated reactions from all and sundry. Are you reacting to this? or in the capacity of SP, or is it personally they're going to react to this? What do you think about this regime, this our price model, this new price for PMS? What's been happening lately?
Well, we, as a society, we've made our views over time known to government. We favor a deregulated downstream market where there are many participants, where the forces of demand and supply will be at play. In other words, market-driven downstream. That has been our position for many years now. So reacting to a specific price level is neither here nor there. However, the feedback we are getting as an industry is that the government is working towards deregulating the market. So whether these are early steps in that process is yet to be seen. So we will encourage the government to fully deregulate the sector for growth. It is important that that's done because we haven't seen much growth in that segment of the business in a while. So it will be welcome for our society and for the country, I think, to fully, unleash the market, if you will. And 200 million, if you think about it, you have 11 million registered vehicles, 11 million plus. So there's a significant market here. So what we need to do is just remove all the friction to growth, and the industry will grow and employ people and create value. So that's our position. We favor a market-driven downstream.
Okay, let's end this way. Mr. Chairman, for any regulatory system to succeed in a country like Nigeria, what are the key guiding principles that must be present? Let's end it on that note.
Well, yeah, for regulation to be effective, it must be fair, it must be neutral, it must be consistent. So and that's really is a journey. It's not a one-shot thing. So you build these capacities for over time. So we want a regulatory regime that is consistent, that is of general application, that is fair and neutral. And once we get that, I think the market will grow.
I must thank you very much for your time, Mr. Joseph Nwakwe. He is the chairman of the Society of Petroleum Engineers Nigerian Council. Thank you. We really appreciate your time.
Thank you very much.